Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of September 23rd to September 27th, 2024. Let's dive into what to expect in the upcoming week. This week unfolds against a backdrop of intense global economic scrutiny and anticipation. Investors are keen observing central bank activities, with the Swiss National Bank poised for a potential rate cut amidst a strong franc, and the Reserve Bank of Australia expected to hold rates steady amid easing inflation. Meanwhile, the Federal Reserve's recent rate cut signals a cautious approach to inflation, and the European Central Bank has lowered rates amidst an economic slowdown in the Eurozone. In Japan, key economic data will shape the outlook for the yen, as markets pivot in response to these critical developments. The landscape for investors and policymakers alike is rife with uncertainty and opportunity. The Swiss National Bank SNB will announce its policy decision in September, with a 60% probability of a 25 basis point rate cut and remaining odds favoring a 50 BPS move. Expectations for a larger cut have risen since early August due to the Swiss franc's sharp appreciation against the US dollar and euro. SNB Chief Thomas Jordan, set to chair his final meeting on Thursday, has expressed concern over the franc's strength, amid calls from Swiss exporters for more action to curb the currency's rise. This decision comes as the central bank navigates pressures to support the economy against the backdrop of a strong franc. Before the SNB meeting, the Reserve Bank of Australia (RBA) will announce its decision on Tuesday. Although Australian inflation has eased, reducing the need for further rate hikes, a cut remains unlikely. The monthly CPI for August, due Wednesday, may not be available to policymakers, but with CPI already down to 3.5% Y/Y in July, the RBA is expected to maintain current rates. Even with further declines in inflation, the RBA is not anticipated to discuss rate cuts at this stage, preferring to monitor economic conditions and inflation trends before considering such a move. The Fed's unexpected 50 basis point rate cut in September, aimed at addressing inflation, signals that policymakers are not declaring victory yet. While the easing cycle started with a larger cut, further reductions are likely to be smaller, with 25 BPS cuts anticipated. In July, headline PCE remained at 2.5% and core PCE at 2.6%, both above the Fed's 2% target. However, the 6-month annualized figures showed a sharp drop in July, hinting at a decline in PCE gauges in the coming months. Personal spending is expected to have risen by 0.3% M/M in August, down from 0.5% in July, with personal income forecasted to grow by 0.4% M/M. This moderation in consumer spending has temporarily stabilized the US dollar, as investors await new inflation data to guide future rate expectations. The European Central Bank (ECB) lowered interest rates for a second time in September, providing limited guidance on future easing. After a brief recovery in spring, the Eurozone economy is faltering, particularly in Germany, the bloc's largest economy, though the rest of the euro area shows slightly better performance. Inflation is nearly under control, allowing the ECB to potentially address further economic downturns. In August, the composite PMI rose slightly due to a rebound in services, but the manufacturing PMI remained in contraction, signaling ongoing economic challenges. In Japan, flash PMIs are due Tuesday, followed by Tokyo's CPI figures on Friday, with markets uncertain if the Bank of Japan will hike rates again this year due to mixed economic signals and easing inflation pressures. However, if PMIs indicate continued economic recovery from Q2 and Tokyo CPI shows an uptick, the yen could resume its upward trend, paused after the dollar rebounded post-Fed meeting. This week has been marked by significant economic developments worldwide. The Swiss National Bank's potential rate cuts in response to the strong franc, the Reserve Bank of Australia's steady stance amidst easing inflation, and the Federal Reserve's unexpected rate cuts have all influenced global monetary dynamics. The European Central Bank's rate reductions amidst Eurozone economic challenges and Japan's crucial upcoming data further underscore the dynamic and challenging global economic landscape. Stay informed as we continue to monitor these developments closely, understanding their profound impact on markets and investors moving forward. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.